We're creatures of habit. And when it comes to managing wealth, this can cost you millions. Here's the truth. The wealth management strategy that gets you to $100,000 net worth will limit you to $1 million net worth. The approach that works at $1 million becomes inefficient at $5 million. But most people never change as their net worth grows. I'm Christopher Nelson, and I was able to fully retire after 20 years in corporate and live off of my investment income. Not because I'm smarter than everybody else, but because I learned something that most wealthy people miss. Different net worth levels require completely different approaches. Now, these aren't complex Wall Street secrets. They're systematic strategies and principles that anybody can implement. Today, I'm sharing how your wealth management approach needs to change at each big net worth milestone: 100,000, 1 million, and 5 million. And why your comfort zone might be your biggest financial enemy. And the biggest comfort zone trap of all, sticking with the same investment approach no matter how much your net worth grows. Your investment strategy should evolve as your wealth grows. And most people miss these critical transition points. Now, I learned this the hard way. After my first IPO, I was working as a CIO, or Chief Information Officer, in Manhattan, making good money, but disappointing my wife every Friday night because the job was consuming my life. I was sitting in my Midtown Manhattan office, realizing that my wealth wasn't working for me. I had millions in the bank, but my money had no purpose. It wasn't generating meaningful income, and it definitely wasn't giving me my freedom. The ultra wealthy understand something that most people don't. Different portfolio sizes unlock different opportunities, and these require different risk management and serve completely different purposes. So let's start with the foundation phase. All right. So if you're in the $100,000 net worth range, you're in what I call the foundation phase. Here's what's different about my approach. This isn't just about basic budgeting and saving. You're building the foundation to think and operate like the CEO of your own wealth. The foundation phase has 3 core areas that you need to master simultaneously. First, your wealth management. Yes, you still need those fundamentals. So max out your 401k. Fill up that Roth IRA, build your core portfolio with the low-cost index funds. But here's what most people miss. If you're a high earner, you're likely getting equity compensation or having business equity. This is where real wealth gets built. Don't let your company stock just sit there. You need to have a systematic plan for when and how to diversify. I've personally seen too many people with 80% of their net worth tied up in their company stock because they never created a divestiture strategy. That's not building wealth, that's gambling with it. Second, your business operations focus. You need to run your personal finances like a business. That means real budgeting and planning, not just hoping that you don't overspend. Create a sustainable lifestyle within your means, because lifestyle inflation will destroy your wealth building faster than any market crash. And start thinking about taxes strategically, not just in April. If you're getting equity compensation, you need to understand the tax implications before you exercise options or before your RSUs vest. And third, this is the most important, treating skill development as your highest ROI investment. At this level, the biggest lever that you have isn't optimizing your portfolio allocation, it's increasing your earning power. Focus on building skills that double your income and get you into equity-rich opportunities. A single promotion or job change can add more to your net worth than years of perfect investment returns. That's a much smarter bet than throwing money at speculative investments you don't understand. Invest in your continued education about wealth management. You don't need to become a CFA, a certified financial analyst, but you need to understand how money works at higher levels, because the strategies that get you to the $100,000 net worth won't get you to the 1 million. The key insight most people miss in the foundation phase is that you're not just accumulating assets. You're building the knowledge, the habits, and the systems that will serve you when those assets grow tenfold. Now, once you've mastered the foundation phase fundamentals and hit that $1 million net worth mark, everything changes. This is where you enter into what I call the investor phase. And here's where most people make their first mistake. They keep doing exactly what got them to the 1 million. But at this level, you're transitioning from building wealth to managing and protecting it. The investor phase also has 3 critical areas that you need to develop. First, your wealth management focus expands dramatically. At 1 million, you become an accredited investor, which unlocks a whole new world of opportunities. Now you can access alternative asset investments, real estate syndications, private equity funds, crypto, and even direct investments in private companies. You can also start looking at direct owned real estate, not just REITs. But here's the key. At this stage, you're not abandoning your public market foundation. I typically recommend keeping 50 to 60% of public investments in your core portfolio, then allocating 20 to 30% to these alternatives. This important diversification, because remember, owning public stocks in different sectors isn't real diversification. True portfolio diversification means diversifying across non-correlated asset classes. Second, your business operations focus becomes crucial. This is where you need to get serious about finding efficient tax professionals. And I don't mean the guy who does the basic returns. You need somebody who understands alternative investments and can help with things like tax loss harvesting and asset location strategies. You also need to start thinking about estate planning. Get connected with an estate planning attorney, not just for a will, but understand how trusts and other structures might benefit as you grow your wealth. And asset protection becomes real. Look into umbrella insurance policies, consider LLCs for real estate investments, and start building relationships with quality legal professionals who understand your situation. Third, and this separates successful investors from everybody else, developing your CEO mindset about your wealth. You need to start architecting your financial future intentionally. This means writing an actual investment thesis, not just, I want my money to grow, but a clear strategy for how you're going to build wealth over the next decade. If you want this template to help you quickly build a robust investment thesis, head over to wealthops.io and sign up for my free masterclass. In my masterclass, I'll walk you through setting up your own microfamily office, which includes developing your investment thesis. Okay, the next thing you need to do to start building your CEO mindset is to begin networking with other people building wealth at your level or above. Find other microfamily office builders, join investment groups, attend real estate meetups. The deals and opportunities that really move the needle often come through relationships and not some online platform. This phase is all about transitioning from being a passive saver to being an active wealth architect. You're making conscious, strategic decisions about where your money goes and not just hoping your 401k performs well. The investor phase can take you from 1 million to $5 million net worth. But once you're approaching that $5 million mark, everything shifts. This is where you enter the operator phase, and it's a whole new game. You're no longer just investing. You're running your wealth exactly like a business. At this stage, you are the CEO of your family's wealth enterprise. Here's what changes when you step into operator mode. First, your asset allocation is no longer about picking percentages. It's about defining purpose. Every dollar in your portfolio has a job: income, growth, or capital preservation. Now, when I first crossed $1 million net worth, I made a mistake I see all the time. My portfolio was 97% growth and 3% cash. I had no portfolio income and was heavily concentrated in one stock. Now, if that stock dropped 20%, so did my net worth. Today, my allocation looks like this: 48% income, 48% growth, and 5% capital preservation. That balance generates over $175,000 of cash flow every year while keeping me diversified. And here's the key: you don't just set it and forget it. In the operator phase, you're running quarterly investment reviews, divesting from what no longer fits your thesis and reallocating into what does, and consistently optimizing risk and return. Second, your business operations begin to resemble an actual company. This means building systems, bookkeeping, accounting, clear reporting, KPIs. Just like a real business, you need efficient and accurate operations behind the scenes so that decisions are made on clean data and not just guesswork. And third, at 5 million, the biggest shift is the mindset. You're no longer just managing money, you're managing a legacy. This is where you start identifying new opportunities and techniques, not just chasing every shiny object, but deliberately scanning the horizon like a CEO. What new asset classes or structures or strategies could sharpen your edge? At this level, the right move can change the trajectory of your wealth for decades. You're also thinking beyond yourself. Succession planning and family involvement becomes critical. How do you pass down not just assets, but decision-making frameworks? How do you prepare your kids or even your grandkids to step into the values and the systems that you've built? And here's the real payoff. Aligning your money with your life. Wealth in this phase is not just about a scoreboard. It's about unlocking the lifestyle you actually want. Whether this means more time with family, traveling the world, or funding passion projects, you design wealth to fuel this. This leads to the ultimate goal. You achieve the work optional status. You don't have to grind for money anymore. You choose what you want to work on, who you work with, and when you step away. That's the freedom that the operator phase is built to deliver. Now that you understand these 3 phases, let me share something crucial. In my years of helping people manage wealth, I've seen the same costly mistakes happen at each level, and these mistakes can cost you hundreds of thousands and maybe millions over time. In the foundation phase, the biggest mistake is trying to get too fancy too early. I see people with $100,000 trying to day trade or chase the latest crypto trend. Stick to building skills and master the fundamentals first. In the investor phase, the mistake here is not doing proper due diligence on alternative investments. You've proven at this point that you can build wealth, but don't let that get to your head and think that everything you touch is going to turn to gold. Only invest with proven operators with long track record. And in no circumstance should you invest with a 20-something guy on Instagram raising a fund that has no track record at all. Doing things like that is going to get you burned. In the operator phase, the biggest mistake is not thinking like a business owner. You're still managing your wealth like a hobby instead of operating it like the multi-million-dollar enterprise that it is. You need systems, you need a team, you need a strategy that goes beyond just buy and hold. The key is recognizing which phase you're in and making sure your strategy matches your wealth level. This brings me to an important question. How do you actually implement this? Well, here's the key. Start where you are, not where you wish you were. Each phase builds on the one before it. So if you try to skip steps, the whole system breaks. If you're in the foundation phase, your job is simple. Automate your savings, max out tax advantaged accounts, and invest in the highest ROI asset you'll ever own, your skills. The fastest way from $100,000 to $1 million net worth is growing your earning power, not gambling on risky bets. If you're in the investor phase, it's about expansion by adding alternatives, real estate syndications, private equity, and funds. Start small, learn as you go, and just as important, professionalize your wealth. Get a tax strategist, build an estate plan, protect your assets. This is where you shift from simply growing your wealth to actively managing it. And if you're stepping into the operator phase, everything changes. Now you're running your wealth like a business. Quarterly reviews, bookkeeping, accounting, tax efficient structures, and most of all, the CEO mindset. You're scanning for new opportunities and involving your family in the process. And you're aligning your portfolio with the life that you actually want. It's here that you unlock work optional freedom. Wherever you are today, remember, the strategy that got you here won't get you to the next level. Upgrade your playbook, master your phase, and keep leveling up. And that's how you stop working for money and start making your money work for you. So here's the choice. You can keep managing your money at the same way you did at $100,000, or you can step into the CEO role of your wealth and start building something that lasts for generations. Wealthy families don't just invest, they allocate with purpose. They don't just save, They systematize. They definitely don't hand their future to an advisor juggling 200 clients. They run their wealth like a business. This is exactly what I'll show you inside of Wealth Ops. How to build your own micro-family office, how to create a portfolio that funds your lifestyle, and how to operate with the CEO mindset that unlocks true freedom. Head to wealthops.io or click the link in the description to watch the free masterclass right now. And if this resonated, don't miss this video where I break down the 3 types of family offices and how to know which one is right for you based on your net worth. You can check that out right now.